What's up, you guys? It's Paul here. In this video, I wanted to quickly explain to you what stock splits are and how they affect the value of options, okay? So if you've been watching the news lately, both Tesla and Apple announced stock splits recently, where Tesla is doing a 5-to-1 stock split and Apple is going to do a 4-to-1 stock split. And most people probably know what it means in terms of shares, but there are several people who are not necessarily sure how they affect the value of options, okay? So that's what I wanted to explain to you in this video. Now, stock splits are when a company decides to divide each of its shares into multiple shares to improve the stock liquidity, okay? What this really does is it converts seemingly expensive shares into more affordable shares so that investors can now look at it as a more affordable option and want to decide in stocks again, okay? So when you look at a stock like Tesla and Apple, for example, Tesla is trading around $1,600 right now, and Amazon has been over $3,000. And there are so many regular retail investors who potentially don't invest in these stocks because they seem very expensive, okay? But when a company decides to do a stock split like this, that's when this Tesla, for example, with a 5-to-1 split, it goes down from $1,500 to now say $300, and Apple goes from $400 to say $100 a share. Now, even though the value of the company itself still remains the same, the fact that the actual value of each share appears to be lower, there are far more investors who are likely to invest in it and far more investors who can potentially afford it, okay? Now, that's why this improves the stock liquidity, because now more people are trying to buy the shares at a lower price, and that's how it can keep boosting up the value of the company, okay? Now, as I mentioned below, Tesla announced a 5-to-1 stock split, so now you'll own 5 times the number of shares for the same value. So let's say you had 2 shares for around $3,000. After the stock split, the value of the shares will still be $3,000, but instead of 2 shares, you'll now have 10 shares, okay? Same thing with Apple. If you had 5 shares for $2,000, they'd now still be worth $2,000, but instead of 5 shares, you'll have 20 shares, okay? Now, how do stock splits really affect options value? Okay. Now, the options will undergo a process called being made whole, where it will essentially undergo the same split as the shares, and the value of the option will adjust accordingly. Okay. So, taking Tesla and Apple as an example again, if you own 2 calls on Tesla for a $1,500 strike price, after the stock split, now you will own 10 of those calls instead of just 2, and the strike price will drop from $1,500 to $300. Okay, now the value of those 2 calls, whatever it's going to be, will still remain the same, but instead you'll have 10 calls now. Same thing with Apple. If you have 2 Apple calls for a $500 strike price, after the stock split, they'll be worth they'll convert to 8 calls at $125 strike price, okay? Now the total value of all the options will still remain the same before and after the split, okay? Now here's why I say that stock splits are great news for options traders, okay? Now if you actually look at the value of Tesla options here, even just 1 month out, if you wanted to buy a call on Tesla, an at-the-money call is still worth $13,673 for 1 call. Okay, that's extremely expensive, and most people wouldn't want to spend that kind of money to buy a call or a put. Okay, if you look at a put, even the put is worth $15,000. Okay, now after the stock split, once Tesla does the 5-to-1 split, this same call option, instead of being worth $13,000, it'll drop by 5 times that, which, if you do the math here, will now be worth $2,720 for 1 call option. Okay, so that's why the options become a lot more affordable after the stock split. Same thing with Apple. If an Apple call is worth $5,000 now, it'll be worth only $1,250 after the stock split. Okay, that's exactly what happens with options. Okay, so both the calls and puts, which were extremely expensive before, will become a lot more affordable, and regular retail investors would be able to trade options on both of the stocks without having to put out too much capital. Okay. Now, remember that even though the stock itself is more affordable now, the market cap of the company will still remain the same, okay? So if you look at Tesla here, the market cap right now is $302 billion. Okay, now just because they've done a 5-to-1 stock split, this value doesn't change. It'll still remain the same, but the value of each share is lower after the stock split. Okay. Now, this is a perfect setup for owning more shares and selling covered calls. Okay, now if you watched a few of my previous videos, you know by now that covered calls are some of my favorite strategies. Now, the reason I say that is because for you to sell covered calls, you need to own at least 100 shares of that stock. If you don't own 100 shares, you won't be able to sell covered calls. Okay, then it would be called what a naked call or a short call, and you will be exposed to a tremendous amount of risk, and that's exactly how people lose a lot of money with options. Okay, so I only recommend covered calls when you're selling any kind of calls on any stock. Okay, now if you look at options here, let's say I did own 100 shares of Tesla, which I don't, because 100 shares of Tesla would be worth $163,000, and I obviously don't have that kind of money invested in Tesla. But say I did own that, and you wanted to go a month out, and you wanted to say Tesla will stay below $2,000, and it decide to sell a $2,000 strike price, you will instantly get a credit of $4,645 for selling that call. Okay. You could literally do this month in and a month out and potentially make $4,600 per month just selling covered calls against Tesla. Okay, that's why covered calls are such a powerful strategy. But now, once Tesla does the 5-to-1 split, each share will now be worth $1,635 by 5, about $327. Now, for you to own 100 shares of Tesla, you only need to put in $32,700, which is still a lot depending on what your current portfolio value is, but it's definitely a lot more affordable than $163,500. Okay. Now, the value of this particular call will turn, instead of the $2,000 strike, you would be selling the $400 strike, and the amount of credit you would get, instead of $4,645, you will get $929, which is still pretty decent. Okay, to be able to make $900 to $1,000 a month selling covered calls in Tesla and Apple, that's a pretty solid deal. Now, if you look at Apple here, let's say you want to sell covered calls in Apple as well. Let's say you take a month out. Let's say you want to sell the $500 strike price. Right now, if you own 100 shares of Apple for $45,000 or $46,000, you could sell one of this $500 strike price to collect $765. But after the stock split, this for you to own 100 shares of Apple, now you only need to spend $11,500. And this same covered call would be a strike price of $125, and you would collect about $191 for one covered call on Apple. Okay, so that's exactly why I say that stock splits are a perfect setup to make it more affordable for you to own hundreds of shares of a particular stock and then be able to sell covered calls against it. Okay. So I hope that was informative for you guys. If you have any questions, please be sure to leave them below. I'll answer each and every single one of them. If you enjoyed the video and if you learned something, please to hit the like button and subscribe, and be sure to hit the notification bell. Okay. Thanks again for watching, and until next time.